Good morning, traders. How are we doing today? I am rocking my absolute favorite shirt, Bob Ross, today. Make happy little mistakes because we are painting the picture of GameStop today on the charts. It's a beautiful Monday morning in which these stocks, or at least or my stocks, have opened up green, which is a great thing. Tracking GameStop here. I know we gave the week going into the week an update on AMC, an update on Neo, and an update on crypto. But I wanted to give an update on GameStop here because you are in such a critical point in this chart's history. You did get a bounce on the day, opened up green, almost up 1% now. But you want to break this trend line, this trend that smashed you from 24 all the way down to 2192. If you break this trend line and volume starts to pick up, guys, you could see GameStop begin to snowball momentum into the top of this wedge. Once you arrive there, it's going to be key that bulls and particularly institutional buying really steps in here because you're testing the daily death cross. So you can invalidate this by pretty much not gapping above, but really, crazy price action like you had back here. You could invalidate that death cross if you get bulls to step in, because past the death cross, you're going into the gap fill. So you could look for a possible rejection. Well, you already did have the rejection, actually. Pretty much pitch perfect rejection off the gap fill. And you'll see this on many different stocks, is that stocks will almost fake out bulls that are looking for a gap fill or fake out bears that are looking for a gap fill. There's another example on BRCC, Black Rifle Coffee Company. If you look at that example, you'll see that recently, actually, it came right up to the start of that gap fill. Bears stepped in and defended it. That's exactly what happened here with GameStop. Bears defended the heck out of this gap fill, so you didn't push price all the way back up to 28, right? Because past 28, some very key things happen. You get above this death cross, you get one step closer to this $30 gap fill, and then you're out of this macro scale, beautiful bull pennant here that is going to take you higher on GameStop because the fundamentals are just clean. The bottom line is really picked up here with Ryan Cohen closing out a lot of the underperforming brick and mortars. So fundamentally, I would say you're going higher here. What the chart's going to decide, inevitably it's going to decide, right? But first steps first, you need to break above this and get to the top here. Now, if you went back down for one last test, that is about as coiled as this thing could get. So I would anticipate a very, very, very volatile move. And we already talked about, right, in our last video, you put in the one touch of bullish divergence here, closing on a lower candle, but a higher high on the RSI down here. That, to me, was my indication that you're going to see a green open today, and you need to see it hold, because if you don't close green today, if you make a lower low, you are out of this trend line. You are out of this trend line, and you're going down to retest the Holy Grail trend line on GameStop, which also, of course, would not be the end of the world, right? Good news for GameStop is crypto is green today. Bitcoin had a nice bounce and is looking to make another all-time high, had a nice little dip. And then Dogecoin is also breaking out of its falling wedge today. And I know we kind of track that with risk on assets. So two good things for GameStop going for it in crypto. However, I did want to get into the weekly here because the weekly chart, when I first saw this cross down, I was a little worried. That the weekly MACD had crossed down as soon as you knifed back into this formation. And I really, honestly, I expected you to get kind of crushed here. I did. I'll be honest. I expected you to fall out of this bull pennant that you're forming on the weekly and then retest that. But you've held pretty strong. You made a nice double bottom here, bullish divergence on the 4 hour, And then the not the RSI, but the the MACD has continued to consolidate here while you have continued to consolidate. So you need to see this begin to curl up, because if the weekly MACD curls up here, guys, you could consider this like game over if the weekly MACD begins to curl up here, because the last few times you had a weekly MACD cross to the bull zone. Just take a little measurement, just a little bit. You ran up 33%. That's a pretty minor one because there's a fake out, right? You had another one, pretty much perfect here. Crossed up here, ran up 65%, and then this one was history, right? We kind of know what happened here. You went up like 300%. And this has been a pretty reliable indicator on GameStop, regardless of where you take it, right? Take it from down here, you cross up, you go up 52%. Cross up here, 78 and 73%. So it is a very reliable indicator, guys. The weekly MACD, one of my favorites. If you are looking at the overarching trend, right, you could see it begins to curl up here, and that's when you make your move. If you can confirm this daily close, and hopefully you're going to get above the weekly 200 EMA, because you do not want to levitate or gravitate below this thing. I mean, every single time on the weekly that you've closed below, the next week you have slingshotted right back above it, and you did so right here in June. You closed below it for the first time since here. First time since April or March, whatever the heck 28 is. You closed below it here, and this is a really good example, right? You closed below, and then you had an 8% week, a 12% week, 1, 2, 1, 3, 16, right? Momentum began to spiral as a lot of people picked up shares or options at significantly discounted prices, right? You could see the same exact thing happened here. You closed below here, rocketed back above it. Closed below here, rocketed back above it. And since you had this pretty large size move back in June of last year, that has been the trend, that bulls are stepping back in. They're regaining control every single time you have dipped below the 200-day EMA. And if you want to see this bull pennant come to fruition, guys, if you want to see nasty, nasty gains, you're going to expect a pretty large size move or a large size launch from this test of the 200-day EMA, because if you fail to reclaim this, you are going down to the teens most likely. So that is kind of the story on GameStop. I expect a nice sized move to reclaim this 200-day EMA, and for this weekly MACD to continue to curl up as you either trade sideways or break out and retest this macro bull pennant, because that will inevitably take us higher. Take us higher on AMC. AMC's up about 1/3%. And we talked about this uptrend, right? We talked about this uptrend in our last update. You broke below it last week on lower volume. Granted, and mind you, you are still below it. So you want to see a reclaim on better volume, right? Every single time you've had these large volume nodes or large volume wicks, AMC's made some pretty nasty moves, 13%, 7%. But going down 8 and 12 on lower volume, you could expect the bulls to possibly step in here before earnings and get you back in that 330 range, 330 to 320 range here. Anything below that, maybe you retest $3 and then you go back down. That is your bear case scenario on AMC. But again, what I would expect if crypto begins to roll back in, right? I mean, you look at Doge here. Doge particularly is in a very powerful spot here, retesting this macro downtrend, same way it did back here, right? Retested this macro downtrend before you went. So I really don't see a lot of space for the risk on assets to go down more, unless you had some broader market speculation, right? But this falling wedge actually brought you below the uptrend, very, very similarly to AMC's position right now. You caught a bid, you're breaking out of the falling wedge, and you could expect Doge to reclaim this golden cross that you had on the daily and to reclaim this uptrend. And when it does, this thing is going to absolutely squeeze nasty. It's going to get gross, guys, if you're able to do that. If not, you're looking for another retest at around 14 to 16 cents, depending on the volatility of the move. And I do believe that pairs in tandem with AMC, because Doge leads the way for risk on assets. So whenever money is flowing back into the market for these higher volatility plays, they are going to come through Doge typically. At least that's what history says. So something to watch there, what Doge does in the next couple days. We'll find out what GME does, because you really only have until the beginning of September until this thing is so coiled and so stretched for pressure that this thing is going to pop up or down, right? Just be ready, because this thing could launch, retest, and go. It could also test, dump, test. Whoops. Oh no. Delete that one. Could also test, dump, test, and then make a further dump down to 17. That would be unideal, but anything's possible, guys, truthfully. You have a daily cross down on the daily MACD, which is also a good indicator. So GME is kind of 50-50 right now, so you really just have to wait and see how this thing coils. Bitcoin in a good spot in this falling wedge, also holding the long-term support trend line that you formed back in April. Holding on by a thread there. So you'd like to see a strong close above and a strong bounce. Your bounce here was how much? Whoops. Bounce here was approximately, really, that seems like a lot more than 25%. Am I crazy? No, it was 25%. 25% bounce up from there. This is the one that was crazy. And a 50% bounce from there. So I expect a smaller size bounce because you're within almost a rising wedge on Bitcoin. So I think you could go up and test this $135,000 test here. And if that does happen, that is overall bullish for GameStop, because GameStop owns approximately like $500 million worth of Bitcoin. So continue making all-time highs on Bitcoin, no problem with me. I would support that every step of the way. SPY cooking with freaking oil right now. Looking to fill the gap on the S&P 500 to the north side at approximately 130. So it might have already done so. No, not yet. Gap still there. Looking to fill the gap at approximately 130. And to be honest, I thought this thing was going to fill this gap here at around 600. Still could. So be careful, right? This was kind of my depiction of creating some kind of chop into an inverse head and shoulders and then a new all-time high. This thing could do anything. So just be very careful. I realize that the entire market is predicated on the S&P. So you have to watch this if you are in risk on assets, no matter what, because if this thing dumps, risk on assets are going to take a dump with it. So be careful, be careful, be careful. Cannot state that enough. This is not financial advice, guys. Please, please, please make sure you drop the follow and drop kick the like button. I appreciate all the love and support we've been building here. We're trying to build a market, or we're trying to build a community of retail investors who are like-minded like us, right? Want to kind of network almost. Nothing paid, but I want to get to know you guys and build friends that are into similar things that I am, right? So continue to spread the love, continue to like and follow and watch, guys. I appreciate it. No accidents, just happy ones. Bob Ross. God bless, guys, and peace. See you in the next video.